Assalamu alaikum. Welcome to the e-learning program on Mudaraba. In this module, you will learn about the concept of Mudaraba, the definition of Mudaraba, the process of Mudaraba, profit calculations and accounting in a Mudaraba, and what happens in case of losses. The two types of Mudaraba and differences between them. Mudaraba in deposit-based products. Profit ratios. Termination of a Mudaraba transaction. What we have learned in this module. Mudaraba, an Islamic financing technique. A Mudaraba is an agreement between a capital provider called the Rabul Mal and the entrepreneur called the Mudarib, where the entrepreneur can use the funds of the former for his business activity. The entrepreneur provides labor, expertise, and management. Profits made are shared between the capital provider and the entrepreneur according to a predetermined ratio. We learnt about the steps required to carry out a Sharia-compliant Mudaraba transaction. We were told in detail about how the accounting procedures would be dealt with and how provisional accounting will be carried out every month to be adjusted at the end of the year. It is necessary that the parties agree right at the beginning on a definite proportion of the actual profit to which each one of them is entitled, which has been left to mutual consent. However, they cannot allocate a lump sum amount of profit for any party, nor can they determine the share of any party at a specific rate tied up with the capital. In a Mudaraba arrangement, financial losses are entirely borne by the Rabul Mal. The loss of the Mudarib is that his labor goes unrewarded. The division of assets at the time of liquidation has been elucidated in this module. You may now reinforce your learning by going through this topic in the illustrated textbook and check your comprehension of the subject by attempting the questions in the workbook. Our next module will introduce you to the concept of Tawarruk. The concept of Mudaraba. Dr. Rashid, a successful doctor at the specialty hospital, wants to further his career by opening a clinic of his own. But he does not have the financial capacity to set up a clinic. Since he is already aware of Islamic banking and has been a client of an Islamic bank, he looks no further for the financial assistance for the venture. Dr. Rashid discusses his requirements with Omar, the relationship manager at the Islamic bank. Assalamu alaikum. Wa alaikum salam. It has been a long time, doctor. How can we help you? You know, I have been working with the specialty hospital for the past 3 years. I have a successful practice. Now, I wish to open a clinic of my own, preferably somewhere downtown. I do not have enough capital, and so I thought you could give me financial assistance. All I can offer at the moment are my skills as a doctor and as a manager. Yes, of course. As I see it, a Mudaraba arrangement will be a possible mode of financing for your requirement. I've heard of Mudaraba as a trade-based business transaction. But at the clinic, I'll be offering service to my customers and will not be trading in any commodity. I see that you have done your research. You're quite right. Mudaraba was originally meant for trading businesses. In fact, many early jurists did not allow non-trade Mudaraba because it could cause some problems at the time of liquidation or in terms of distribution of profit. But currently, is Mudaraba a permitted arrangement for financing service-based businesses? Yes, even eminent jurists like Imam Hanbal have allowed it on the analogy of Musakat and Muzarat. Musakat and Muzarat are forms of partnership in which one person provides orchards or the land and the other person provides the labor and both share the produce. It is on this basis that most of the contemporary jurists allow Mudaraba for service-based or asset-based projects. As needs of businesses have diversified, so has the use of Mudaraba across a wide range of business sectors. In fact, even in Islamic banking, customer deposits are managed on the basis of Mudaraba. So, we will be able to finance your requirements too on this basis. We may provide you surgical and other hospital-related instruments while you will manage the clinic, and we may share the net income. Definition of Mudaraba. Mudaraba is a partnership agreement between a capital provider and an entrepreneur. The capital provider is called the Rabul Mal and the entrepreneur is called the Mudarib. Let us look at two different scenarios where Mudaraba is used by Islamic banks and the roles adopted by the banks in each scenario. Scenario 1, where the Islamic bank gives finances to Dr. Rashid through a Mudaraba arrangement. The capital provider or the Rabul Mal provides funds to the entrepreneur for doing the business. The entrepreneur or the Mudarib provides his expertise, labor, and managerial skills. The profit is shared between the financier and the entrepreneur according to a predetermined ratio. Scenario 2, where the Islamic bank receives deposits from customers. Customers place deposits with the Islamic bank. The Islamic bank offers its expertise and resources to manage the funds. The profit is shared between the depositors and the Mudarib according to a predetermined ratio. In your case, we will invest the money to help you set up the clinic. You, as the entrepreneur, will contribute your services and skills as a manager and as a doctor. Well, that sounds very promising. So how do we go about this? The process of Mudaraba. I'm sure you have prepared a business plan and have an idea of the investment that is required. Yes, of course, I'm looking at an investment of about 1 million dirhams. In that case, we will analyze your plan and determine its feasibility. Once we find that your plan is feasible, we will release the funds. You can then set up the clinic and manage its operations on a day-to-day basis. Profit calculations and accounting in Mudaraba. How do I repay your investment? Through my share of the profit. However, the profit cannot be claimed or realized unless the capital is recovered or maintained intact. Profits will be shared at a percentage or ratio of the realized profit. In order to avoid uncertainty or gharar, these percentages shall be clearly agreed upon at the time of entering into the contract. In any case, we cannot specify an X amount as profit for either of us. Profit thus earned will be divided between you and the bank. I hate to ask this, but what happens if there is no profit? If there is no profit, all financial losses will be borne by the Rabul Mal. There will be erosion in the capital. The entrepreneur's expertise will go unrewarded. How will the accounting be taken care of and what all will be considered when calculating the profit? Now that is an important question. We may agree on an accounting period of 1 year. In your case, all expenses for running the clinic, salaries of the staff, medicines, utility bills, rent of the premises, all these expenses will be subtracted from the total annual revenues. Profit, if any, will be shared between you and the bank. Provisional accounting will be made every month. What if there is a loss in 1 month? If the business has incurred a loss during 1 month but has made profits during the other months, the profits shall be used to offset the loss during the year. The balance profits, if any, shall be distributed between the Rub al Mal and the Mudarib in the agreed ratio. What about my salary? I'm sorry, you will get no salary. No salary? Don't worry, we can agree on a compensation for your services as a doctor. This, by custom, is not a part of the Mudaraba operation. Therefore, this agreement will be separate from the Mudaraba contract. Also, since you are a partner, you will be getting a share in the profit against your management services. We will also mutually decide on an amount that you could draw every month on account basis. The amount withdrawn on account basis will be adjusted against the Mudarib's profit share at the end of the financial year. What happens if I am unable to pay the difference amount to the bank? Don't worry, the agreement between us will take care of all such eventualities. Loss in a year can be carried forward and adjusted against the profits of subsequent years. Initially, the tenure of the Mudaraba agreement between you and the bank will be for, say, 4 years. We will mutually decide in the agreement that a part of the net profits of a year will be kept as reserve for offsetting a possible loss in the coming years. Similarly, an amount overdrawn by you during a year can be carried forward to the next year. At the end of the Mudaraba, the amount in the reserve account will be distributed between you and the bank according to the pre-agreed profit-sharing ratio. Types of Mudaraba partnerships. There are 2 kinds of Mudaraba partnerships. In Mudaraba al-Muqayyada, the Rub al Mal may specify a particular business for the Mudarib and invest the money in that particular business only. This is known as restricted Mudaraba. In Mudaraba al-Mutlaqa, the Rub al Mal leaves it open for the Mudarib to undertake whatever business he wishes. He is authorized to invest the money in any business he deems fit. This is unrestricted Mudaraba. Mudaraba in deposit-based products. You had earlier mentioned about Mudaraba in the context of deposits. Yes, Mudaraba is by far the most preferred mode for managing customer deposits. Let us take a look at Mudaraba in a deposit-based product transaction. The depositor provides the funds. The bank acts as a discretionary fund manager for the investment of these funds. The profit-sharing ratio between the depositors as a group and the bank is determined upfront. For example, 70% for the depositors and 30% for the bank. Profit ratios. Can you explain on what basis the profit ratios are fixed? The share of profit can be in equal or different proportions, keeping in view the nature of the business and the contribution of the entrepreneur in generating profits. The profit-sharing ratio can be 50 to 50, 40 to 60, 70 to 30, and so on. Sharia has left it to the mutual consent of the Rabul Mal and the Mudarib. But this must be decided at the time of entering into the contract. Subsequently, the ratio can be changed with the mutual consent for any mutually agreed period. As Rabul Mal and Mudarib, we cannot allocate a lump sum amount of profit for any one of us. Also, the share of profit will have no reference to a capital contribution. For example, it cannot be a percentage of our investment. Our profit in Mudaraba will solely depend on the net income from the business. I understand. This must be why, as a Mudarib, I cannot claim any salary. We will now look at the profit distribution ratio. Is it true that profit distribution ratio can vary according to the business situation? Yes, but this must be explicitly specified in the agreement. Let me give you some examples where the profit distribution ratio can vary according to the business situation. Case 1. If you trade in cloth material, you will get 33% of the profit. But if you trade in tailored clothes, you will have 50% of the profit. Case 2. If you do the business in this town, you will be entitled to 30% of the profit. If you do business in another town, your share will be 50% of the profit. If you earn profit more than 25% of the capital investment, the sharing ratio would change from 50-50 to 60% for you and 40% for me. Termination of Mudaraba. How can the Mudaraba contract be terminated if necessary? The Mudaraba can be terminated at any time by either of the two parties by giving a notice to the other party. The Sharia principles allow both parties to mutually agree on the period of the joint venture. The Mudaraba agreement will cover the instances when it could be terminated by either side. What will happen to the assets once the contract is terminated? If all the assets of the Mudaraba are in cash form at the time of termination and some profit has been earned on the principal amount, final accounting will be undertaken against the net profits of the Mudaraba operations. The capital provider will receive his capital. The profit shall be distributed between the parties according to the agreed ratio. In a trade-based Mudaraba, the termination of Mudaraba and final distribution of profits is made on the basis of the selling price or the fair value of the Mudaraba assets. The Mudarib can purchase the asset at a mutually agreed price. The Mudarib can sell and liquidate the asset so that the actual profit may be determined. Can I do my business with a partner as well? There is another doctor who may wish to share the clinic with me. Yes, a Rabul Mal can contract a Mudaraba with more than one person through a single transaction. In that case, both of you will be Mudaribs, but we shall treat you as one party. The bank can offer money to both you and your friend, so that each one of you can act as a Mudarib. The capital shall be utilized by both of you jointly. Both the Mudaribs shall run the business as if you are partners. The share of the Mudarib shall be distributed between both of you as may be agreed between you. What about food and personal travel expenses incurred during the course of the business? The contract of a Mudaraba does not allow the Mudarib to claim any personal expenses. However, when on a business trip outside his own city, he is permitted to claim travel, accommodation and food expenses. All such expenses can be charged to the Mudaraba account. This also must be specified in the Mudaraba contract. In case the assets appreciate in value over the period of the transaction, will this be taken into account at the time of profit taking? The division of profits in a Mudaraba is always proportional. If the assets have appreciated in value at the time of liquidation, only this increase may be calculated as a part of the gross returns from the Mudaraba operations. Moreover, the original contract may contain a clause concerning the distribution of the value of the expected appreciation, specifying that a proportional share may go to the Mudarib. If the business creates ample goodwill, we may also share it with mutual consent. Suppose I wish to put in some capital of my own as well. Then it will become part of another contract which is called Musharaka. We can even have a joint Mudaraba and Musharaka contract. Thank you for being so patient with me. I've understood the concept of Mudaraba clearly now.